Good morning, everybody. Jeff Slakey here on the Daybreak Show. We've got a great guest in studio right now to talk taxes as we are seeing returns come in and out with the IRS. It's Mike Wittenberg, CPA. Good morning, Mike.
Good morning.
Good morning.
WittenbergCPA.com. Good website to go to learn more and more information on this. We saw back in 2017 the Tax Cuts and Job Act. Congress passed this, signed by the president, and this is going to be the first year that this is kind of coming through the pipe for people. And let's start with some of the highlights that came from that, if you've got them, and how they are impacting the taxpayers nowadays.
You bet. So some of the highlights that the first thing that affects everyone really is the rate change. So we have all the brackets we're all familiar with. We have the 10%, 15%, 25, et cetera, for most taxpayers on up. So every bracket structure was changed slightly. So, for example, the 25 went down to 22% as a rate. The 15 went down to 12% as a rate. So for most people, there's a little bit of savings at each income level in each bracket. And not only that, but the brackets were expanded somewhat. So most people are going to see that when they file, if they actually look at tax liability current year 18 versus 17 and prior, they'll see some savings in that.
The other thing that we're starting to hear as people are getting their tax forms, and maybe you've got some answers to some of these misconceptions perhaps, but as we were getting ready for this, there was talk at a time of being able to fill this all out on the size of a postcard. Are people seeing that, or is that a little misconception?
It's a little bit of a misconception. I think it's a reformatting. Perhaps the IRS was trying to catch up with tax law and also simplify the formatting by saying we'll give a summary page which has basic taxpayer preparer information, which is page 1 of the 1040. It used to be a full page. The back page is a summary of income and expenses. I think what's tricky, though, is that to feed that second page, which has a summary of all those income and expenses, you've got 6 schedules now. So if you're looking for a line item on page 2, you may have to go back 5 or 6 schedules back to find that actual calculation. So it obviously depends on how complicated the taxpayer's situation is, if they're self-employed, if they have a business, if they have credits that apply. You'll have to dig deeper than those first 2 pages, which are really a summarized version of the 1040.
Talk to me a little bit about you as a CPA, for those who may have just only ancillary heard these letters bandied about. Certified public accountant, I believe, is what it is. And explain to us what that is and how a taxpayer getting ready to start their returns would benefit from using you versus some of the online resources.
Yeah, so CPA, Certified Public Accountant, we are college degreed professionals. We have a requirement for continuing education of at least 40 hours a year of ongoing education in tax, accounting, finance. The CPA has some latitude about choosing their area of expertise and what they choose to focus on. So those folks who are very simple and have a 1040 and maybe no deductions and maybe not even a spouse, yeah, go online and file. There's some really nice tools on the IRS website you can go to and without any assistance at all. So those folks who have a business, those folks who have farming activity, they have investments, partnerships, rentals, that kind of thing, I would say usually you're going to do better with hiring a professional. And that's because there's more complexity. And I think if you look at not only the tax law changes, which I'll leave you a few pages of detail for that, but the reality of how that hits the actual tax return, you'll see that there's a lot more complication than meets the eye.
When we look at the Tax Cuts and Job Act of 2017, one of the things that we're noticing now is perhaps people are getting a little bit more in each of their paychecks, and that has implications on possible returns and payments. How's that all working out?
Yeah, I think it's kind of was a misperception that when people file, they'd have this big lump of money coming back based on the tax law changes. And not to say that everybody might see a little better tax picture, although I just filed a return yesterday, for example, where enough deductions were changed where they weren't allowed. People aren't allowed personal exemptions any longer. So they actually ended up the other way. They actually ended up more than they would have owed under the old tax law. So it's it's certainly not a panacea for all taxpayers, and some people with dependent children or businesses may not end up as well as others. But the idea that there'd be this chunk of money when you file is misconstrued, because most people have withholding during the year. So their withholding, having been adjusted throughout the year based on the tax law tables changing during the year, means that you're already seeing some of that money throughout the year. So I think that's the disconnect, is people expected more of a refund when in reality they saw some of that money come back throughout the year.
Now, I know tax time brings dread to those who know they're going to owe money, and then some joy and maybe a much needed vacation when you get that check in for the return. But if you're getting that check back, right? I mean, a lot of people, especially younger people, don't get that that's the government kind of holding your money during the year, interest free. Because of what? Explain that to me, because I've never really been clear on how when you get a return, you're getting money back. It's because you paid too much during the course of the year.
Right.
Where do you want to end up ideally? Like at zero, like not getting any back, not owing any, or where do most people fall?
Yeah, it's a very good question. So I would say within $500 either way is about a perfect filing. When I prepare a return, if I can be within 1,000, I'm fairly pleased. And hopefully we're on the positive side of that, getting a refund. But in reality, that's exactly right. Is if you have too much withholding or too much in payments, because you can, as a self-employed company owner, you can pay estimated taxes or have other income that necessitates estimated tax payments. Either way, if you're paying in too much, like you mentioned, IRS is holding your money. You get it back. It's your money. It's a credit set aside until you file. I think of it as a reconciliation process when you get your 1040 or your tax return filed, is that they're saying, here's how much you've set aside withholding or estimated, here's how much your tax liability based on your filing, then we'll give you back what's due you without interest, or you'll owe without interest, unless you go beyond the initial filing deadline. After April 15, there begins the calculation of interest either way, whether you owe or get it back.
A lot of folks now are in the gig economy. They're kind of the drivers for the different organizations, or they have their own side businesses. What are some of the pitfalls that folks fall into with maybe not understanding the withholdings from those types of businesses?
Well, I would say if you're anybody who's self-employed should have somebody work with them, even if it's for a while, to understand what the tax law rules are. Because when you owe money, and I have a lot of my small companies become small, say S corps, for example, corporations that they can wholly own, they can use for their conduit for their activity. They have to receive, under the reasonable compensation rules, they have to receive payroll, which has withholding, of course. So there's ways you can manage your payroll responsibilities and your wage responsibilities. And those folks who are self-employed and maybe doing work on the internet and such, or doing work remotely, we have several folks like that. They have to be extra careful, because they're not really thinking about what happens at the end of the year when they file. I've had people come in and say, here's my profit, what happens now? It's like, well, what should have happened is we should have met a year ago, set up a company, got you on a payroll through your company, got your taxes paid in through that company, and you'd be covered. And so there's that, I guess, disconnect about the way people are doing business now versus what the reality of filings are.
Sure.
And we can do so, my office, we do so much remote work anyway. We'll do so many remote, either drop through our portal or through our just through email correspondence, where we password protect filings to show clients what we're setting up for them. But so I work with people all around the country, because they move away and have other businesses that they don't need to come to see me, and that works pretty well.
Yeah.
Now, with these businesses, I've done a lot of 1099 work I've done lifting, and I've done things like that in the past. And what I've noticed that seems tricky is the company's website will say, well, it's your responsibility to set aside your taxes and stuff. But what is the threshold for these businesses to be required by the government to issue you your 1099 information and stuff? It seems that a lot of companies are either trying to skirt it or just kind of get right to the wire of when they have to issue you these documents. Otherwise, they seem to be saying, hey, it's between you and Uncle Sam. You figure this out.
Yeah, so it's a very good question. So the reality is, the recipient of any income, $400 or more, which is a low threshold, you're on your own to report that income. And the other side of it is the payer of that income, when they pay you more than $600, assuming you're unincorporated, which is true for a lot of folks, is that they have to issue a 1099, and the 1099 has to be issued by the end of January of the year following the tax year in question. So if they're paying you and you're doing consulting work or what have you, and you're paid more than that for the whole year, that's the requirement, is to issue a 1099. So it's probably one of the stickier compliance issues, because most companies don't want to mess with 1099s. They're supposed to give you a W-9 in advance of it, just like a W-4 in advance of payroll, where to get your information, they need that completed by you, the recipient. But that's the requirement as far as what they're supposed to report on. Nonetheless, I have people come say, well, I just got $10,000 and gee whiz, the company that's sent me the money didn't send a 1099, and do I have to report it? Well, of course you're supposed to report it. The requirement is any income you receive, legal or not, is supposed to be reported. You may have valid deductions to go against that income, and of course you should. But the point is, the 1099 isn't the driver. It's really, did you receive income, and is it reportable income?
Mike Wittenberg, CPA here in Shelton, and he's available to answer your questions again online. His website, wittenbergcpa.com. You can find him too, right downtown Shelton. Always able to answer your questions on Facebook as well. Well, again, tax deadline is April 15th this year.
April 15th. Actually, it's a hard deadline this year.
Yeah,
sometimes it's pushed
they
out.
have that holiday.
That's
DC.
right. This year it's actually the 15th of April.
Thanks for coming in, Mike.
My pleasure.
Thank you.
Thank you, gentlemen.